Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic is we are going to be talking about business tax credits. So let's unlock the business tax credits that are available to you, and let's talk about what you may in fact be missing. So would any of you ever turn away free money? I know I probably wouldn't either. So let's talk about what we can do to help you tap into those business tax credits and get you the credits that you may in fact be missing. So we see it all the time. There are, easy credits that you could potentially get that people aren't necessarily taking advantage of. So let's talk about what those are. Let's help you save some money, because at the end of the day, most people want to save money and definitely don't want to pay any more in taxes than they need to. So why does this matter to you, right? So credits will help you reduce your tax bill, and a credit reduces your tax bill dollar for dollar. Deductions and credits are going to be two different things. Today we're talking the only thing we're talking about today are credits. So we will want to reduce your tax bill dollar for dollar. So for a small business, a small construction business, you may in fact not know that you qualify for certain credits, right? And so missing a credit could mean smaller profits, less cash flow, right? We talk about cash flow all the time on here. So is there a way to get you more cash in your pocket by in fact saving you on taxes at year end, right? So, what's the difference between a credit and a deduction, right? Two different things. They do very different things. So I want to make sure that we're kind of clear on that. I think sometimes the terms are used interchangeably, but they are in fact very different. So a credit, what is a credit? It's going to directly lower the tax you owe. So for example, if you owe $10,000 and you have a $1,000 tax credit, you will owe $9,000 in taxes. You're getting a dollar for dollar reduction of that income tax that you are paying. Now, what's a deduction? Your deduction can lower your taxable income, and therefore, when you're calculating your tax, it might be lower, but you're not reducing the actual tax. So we'll use some basic things here, your W-2 wages, your standard deduction, the thing we talk about a lot. So let's just say you're a single individual person. I believe this year it's 15.5, maybe 15.6. So that's going to reduce your taxable income number down, and then the income tax is calculated on that taxable income. So you're going to potentially find savings with that deduction, but it's going to depend on the bracket that you're in. So make sure you think about that. If you're in a 22 bracket, a 24, 32, you're going to see some savings, but it's going to differ based on the bracket you're in. If I'm in one bracket, you're in another, how that deduction ultimately affects our income tax is going to be different because we're in different brackets. So again, very, very simple. A $10,000 deduction will roughly save you $2,000. And we're making an assumption you're in a 22 bracket. All right, so that's a deduction. But a credit is literally a dollar for dollar. You owe $10,000. You have a $10,000 credit. You're going to owe zero in taxes. Okay, so that's going to be the difference. And I want to make sure that you kind of have an idea of what that is, because today we're going to be talking about credits, dollar for dollar credits. So what are some of the common ones that we see pretty specific to construction? A couple of these you might see in other industries, but again, we're talking about construction here, right? So what's the first one? It's going to be the R&D credit, or the research and development credit. So when it was originally created, there was this assumption that it was just for science, right? Just for scientists. But there are other things that qualify for it. For example, like, are you improving your overall building processes? Are you using new and interesting technologies in the construction of those building processes? If you are, you're trying out new materials, or you're doing new software development that will help you improve your building and your processes within your construction, right? Those are all things that potentially could be beneficial and actually get you credits, dollar for dollar tax reduction on your tax, right? So it's not just for science. It could possibly benefit you in construction if you're doing new and technologically advanced things in your overall construction processes. Another option, energy efficiency credits. Now, some of these things are moving a little bit with a lot of the tax changes that have happened in the last year. There are pieces of these things that may in fact be going away, but let's just use these as an overall. Let's talk a little bit about this. So if you are installing energy efficient lighting, if you're installing energy efficient HVAC, are you doing solar panels, right? Those are things that you could potentially qualify credit-wise, dollar for dollar, to reduce your taxes. The other thing, which kind of is outside of the actual building process, is there are hiring incentives, right? So there's something called the Work Opportunity Tax Credit, or WOTC. And this is simply for, are you hiring veterans? Are you hiring those that have been unemployed for a long term? Are you hiring people that are in specific target groups? So for example, are you hiring individuals who may have been incarcerated? These are all tax credits. So these are payroll tax credits. So you're reducing potentially your payroll tax expense that you can get for hiring specific types of people back into the workforce, right? So now we've talked about a couple of very different types of credits. One is, what kind of innovations are you creating in your business in terms of construction processes? And the other is, what type of people are you hiring? Your construction processes will get you a credit for reducing your income tax, but when you're hiring, that is a reduction in credits against payroll taxes, right? All tax savings for you at the end of the day, but both are, these are doing very, very different things. So again, it's not just like one type of tax credit. There are a couple of options out there for you to reduce your overall income taxes or your payroll tax expenses. So there are other kind of, we'll call them these overlooked ones, ones that many people aren't necessarily completely aware of. There has historically been energy efficient building deductions and credits. So if you're actually creating an energy efficient building that meets, there are certain energy efficiency standards. And so you have to meet certain standards in order to be eligible for these credits. But if that's the space that you're in, that might be something that you would be very interested in, and that could get you that tax savings, either a deduction or a credit. So are you building buildings that are considered energy efficient and qualify for that actual title of being energy efficient? There could be, and potentially available to you, is apprenticeship type of training credits, employee training credits. In some cases, there may be things available to you on the state level, right? What state are you in? Are there opportunities for you, again, not only on the federal side for bringing in specific targeted groups, but are you bringing in specific targeted groups that your state would like to target, right? There's an opportunity there that we haven't really talked about. We talk a lot about credits. We talk about them on the federal level most times, but are there things available to you on the state side? And again, look at your state or your locality. Sometimes it's even a region. Maybe there is a region of a state that they are interested in getting people working in. They're getting interested in building businesses in and moving businesses into. So there may be credits for you on that level to get you, entice you into moving your business or having your business in that locality. Again, that could save you taxes on the state or a local level, depending on the state that you're in. So what are some of the things that you can do today that will help you when looking at your tax credits, your deductions, and things like that, right? So tip one, you need to go back and look at the last 3 years of your returns, right? You could have claimed a credit. So is there an opportunity to do an amendment on return and get you a credit that you didn't have? If you are in construction and doing innovative construction practices, right? Even simple process changes, could it qualify for an R&D credit? An R&D credit could be a research and development credit, can be quite lucrative if you are doing things that qualify. So that's where not only would you talk to your tax professional, but when we are looking at these credits, we bring in someone who actually specializes in R&D, because that's all they do. They know the credit in and out. It's super specific. And so we would bring in someone else to work with us and ask, like, hey, my client is doing X, Y, and Z. Does this qualify for the credit? And explore it, because it could be quite beneficial just to have that conversation regarding that credit. That could be huge tax savings to a client. So it's worth at least having that initial conversation with that specialist. Again, energy efficiency. There have been some changes in the last year or so. Some things are going, some are staying. So making sure you're aware of what has actually stayed in the new tax laws, right? But do you have opportunities for tax credit with any of the energy efficiencies, right? Again, that's one of the things that's kind of been a hot button topic in the last couple of years. So some of those things may go away, but not entirely go away. So where do you have opportunity there, right? That could be an easy credit for you to grab. Another one is going to be your hiring credits, right? Have you added team members over the last year? Is the WOTC credit, the Work Opportunity Tax Credit, available to you? Are you eligible for a tax credit on the state side for bringing in specific targeted groups, right? This could, takes you a little bit of time to kind of look through the current year as well as, looking at prior years. Are there opportunities for you to go back and get credits, right? Credits that you could, it takes a little bit of work to get them, but they could be quite lucrative to you and actually worth it in the end. So just a quick recap. Your tax credit is going to get you direct savings, and they are just too valuable to ignore. So you want to make sure that you are aware of what those credits could be, because the dollars savings that is available to you could actually be quite significant. Talk to your CPA. Are there tax credits that you could potentially be eligible for? Now, keep in mind, as the CPA, we are not mind readers. We don't know every single thing going on in your business. So again, it requires that conversation to ask some of the questions to find out that you hired people, but as your CPA, we didn't know that any of those people were in that targeted area. Oh, well, that's an opportunity now for you to get potentially some tax credits or payroll tax credits for hiring somebody in one of those targeted groups. Again, potentially a veteran, someone who might have been incarcerated, et cetera, et cetera. Those are all things that could potentially you'd be eligible for. So take the time, take 30 minutes and talk to your CPA. Make sure you're getting all the credits that you can possibly get. And next week, we're going to be talking more about tax. So for today and then for the next 3 weeks, we're just talking tax, right? So next week's topic is going to be kind of what your tax deduction playbook needs to be, write-offs that actually work, what exactly a write-off is. Too often we hear the term used, again, interchangeably, and that's kind of a term that's used. I can use it as a write-off. Like, let's talk about what those really are and then what can possibly work for you in your business. So if, there's a credit that you want to learn a little bit more about, drop it in the chat. We'd love to hear from you. As always, we look forward to seeing you here every Friday. Have a wonderful weekend, and we'll see you next week.